Hey, Mike, when you take a look at the oil market, what needs to be more priced in? What's the trajectory here as we're still battling COVID and you get these kind of production cuts from the Saudis?
Well, there's a shortage of investment that's going to be going into oil, while it's simultaneously with the expectation that the COVID virus will improve as the vaccine happens, that the combination of higher demand and lower supply will make it go up. And that's my short answer. And how much? I don't know, 15 to 25%.
Mike, how do you think that's going to be changed, and how different will your playbook be if we do see the Democrats taking control of the Senate? How much is energy policy going to change stateside as a result of this?
It really is an unknown, because we know what, let's say we know what the more extreme in the sense of change comments are. It's that will in the short run, that will create further potential shortages of supply, and they will try to counteract that with longer-term policies that will also limit demand. But in the short run, I think that actually enhances the probability of oil rising.
And overall, if you get sort of stronger growth, we've seen it with copper, what is the exposure of like CTA hedge funds, alternative hedge funds? How much more do they have to ramp up exposure to commodities?
I think it would be a good idea to, ramp up makes it sound. I mean, one of the strategies that I look at is, because we've been involved with it, is risk parity in the traditional sense of equities, fixed income, and commodities. And so I would think I'm expecting a good year for a traditional risk parity type strategy, which is
and how much inflation is baked into that, Mike? Like how much, if you look at the balance between the kind of keeping everything on either side balanced up, inflation starts to pick up. You see the reaction in the bond market.
I think this Fed is very, very aware of inflation, and they are targeting, as you know, they're targeting 2% inflation, but they're targeting in a different way than they have in the past, which is not 2% like now, but 2% over a period of time, which means they're going to, in theory at least, they're going to be willing to let that rise above the 2% level in order to get that average down to 2%, because right now it's been below that. And then perhaps people will be anticipating that's a sign that inflation will increase. I don't think it will be. I expect this Fed, I don't know what's going to happen in 22, but this Fed will be very aware how tightening has messed up things in the past. They will not do that. And so I don't see inflation being an issue. I trust the Fed to a pretty strong degree right now.